Welcome back to another edition of Special Situations Investing with Greg. This week I'll be talking a little bit about just some research that I did on Continental Resources. I'm not expecting anyone to invest in this one. I just, as I was doing the research, I came across some interesting stuff and I thought that I would share it with you as one of my viewers. Check it out. Hey everyone, welcome back to another edition of my YouTube channel on Special Situations Investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. Hello fellow mutant investors, this is Greg. As I was digging through my research this week, I came across the SEC filings of Continental Resources for their going private transaction. The transaction is that they're going to pay $70 a share in order to take the transaction private by the Ham family. So the Ham family is a majority shareholder in the company already, and so basically they're just taking, I think it's about 16% of the shares that are outstanding that they don't already own, and they're going to repurchase them through probably a tender offer of some sort. I wanted to just do some digging in this one. I thought it was a little bit interesting to look at and kind of see how a family that has a significant amount of wealth, how they would be operating in today's environment. And I came across their letter to their employees as they go about this transition, and I thought that it would be really interesting for you as one of my subscribers to just take a look at this and kind of see what they're saying. So I'd like to share with you an excerpt from this letter that they gave to their employees. The letter goes like this. For many years, being in the public market made sense for Continental, and its shareholders were able to participate in the success of the company. Times have changed in the public market, particularly since the COVID pandemic. The market response has not been there for the oil and gas industry. In 2017, just 5 years ago, there were nearly 50 public E&P companies. Today, that number has dwindled to almost half due to mergers, companies going out of business, or companies going private. This diminishing number of public entities is illustrative of a lack of support from the public market, and we believe there is a resulting underappreciation of Continental. We have consistently said that as long as we are appreciated in the market, we would remain a public company, but if our opportunities were limited by being public, we should look at alternatives. We have determined that the opportunity today is with private companies who have the freedom to operate and aren't limited by public markets, similar to the way that we operated approximately 15 years ago, prior to becoming a public entity. I know that we will all continue to stay focused on doing our work safely, efficiently, and effectively with our unwavering commitment to producing energy responsibly. This passage got me thinking about what motivations investors or companies might have, especially the management team, of going on a private transaction. And I came up with a couple, and I mean, it's not all of them, but I came up with a couple of reasons why these particular companies would want to go private and what's going on with this. Now, before I get into the specific reasons, I would like to caveat that, at least for Continental Resources, because of the nature of the business that they're in, to me, seeing the change from 50 to only 25 of that in the public markets over time tells me a little bit less about that and more about the industry. And with the oil and gas industry, the exploration and production industry, those companies always have a significant amount of boom and bust cycles, and so they'll have a bunch and then they'll die out. And if you look back at the oil and gas industry, this is just kind of one of those, to me, that's more of a business cycle thing than it is that this is the public markets not appreciating them. Although I would say that Harold Hamm, the person that wrote that letter, he probably does understand it a little bit better than I do, and so he probably understands, especially the statement that he said about the lack of appreciation by public markets. And I will get into that as one of the secondary effects of one of the reasons why I think people would want to go private in today's markets. So I see the following trends as reasons why public companies will go private. First and foremost is that we have private equity firms that have continued to get deeper and deeper pockets over the years. And these companies continue to find or continue to seek opportunities for their investing capital. And because these private equity firms are not regulated by public regulations, they have different requirements, but it does allow them to operate a little bit less in the open, and they can go out and they can do things that the normal public entities may not be able to do. The second thing that I see is the change in regulatory requirements. With the rise of the Sarbanes-Oxley Act back in 2002, and then in 2010 with the Dodd-Frank Act, both of those bills added additional regulation and restrictions against, in particular, the management teams of companies. Although this is more of an empirical perspective of my own, and I have to caveat that to let you know that I've done some research on this, but I haven't been able to find stuff that is, this is specifically the reason why people are no longer doing this. But I do think that an increase in regulation does cause some companies to say, you know what, it's not worth our extra efforts in order to have that additional equity. And so we will forego the cost of those funds in order to, or that additional funding in order to avoid the additional issues that go along with those regulatory requirements. With the rise of the SEC pushing for environmental, social, and governance, or ESG items, I can also see that a company, especially one like Continental, will feel a little bit more pressure because this is additional regulatory requirements that, let's face it, they're in an industry that is continually going to be looked at and scrutinized as not in alignment with environmental, social, and governance practices. The third one is that management may want to have more control over their entities. Harold Hamm, in his letter to his shareholders, he talks a lot about how he wanted to make sure that they had better control over their operations from the day-to-day perspective. And as a manager, I can see a lot of our industries will have people that have gotten to that point where they're in charge of an organization, and if it is on the public market, and if they have the ability to take it private, I could see that there would be a push to do that. I think back to the Smith & Wesson investment that I did a couple of years ago. I think about listening to some of the quarterly shareholder meetings, how they were pushed pretty hard from some of their shareholders that had basically an axe to grind against the gun industry. And as a public company, you are beholden to shareholder scrutiny and public scrutiny over some of the activities that you do. And if you invest in something that is not considered socially acceptable, then you can have that type of risk that is involved with it. I also think that someone like Mr. Hamm, he probably wants to avoid the bipolar experiences that you get sometimes from a market, especially in an oil and gas industry, where the market will scream one day that you're worth $3,000 and the next day they'll say that you're worth 30. And that type of environment, it doesn't always cast good shade on your business, and makes it very, very difficult sometimes to operate. And I can see management just having the desire to just not have to deal with that. When I think of this, I also think of some of the great enterprises in the United States, and one comes to mind, Enterprise Rent-A-Car, or going back to the GameStop thing. You have Citadel or some of the other large equity firms out there, or the trading companies that are out there. You have even smaller industry leaders, like Winco Foods, or you have a business that I'm aware of. It's Progressive Dairyman, and that's a journal company out of Jerome, Idaho. And each of these companies have something that's really fascinating to me, is they have the control, or they have direct control over their operations, and they don't have to deal with the public scrutiny as much. They may have shareholders, and they may have to answer to those shareholders, but most of the time those shareholders are specifically trying to invest in that type of industry, and they will seek out the opportunity to be in that company over time. We see that same trend, or we see this same trend in the move of CEOs to basically stack the board in their favor so that they can get what they want. And private equity or public equity, in reality, I see the move. It's more of a psychological move, but I see the move as always trying to get to the point where they're in control of the enterprise that they're leading. Finally, I think that the fourth reason why a company may want to go or remain private is a succession. They may want to be able to give all of their equity directly to their children, and they don't want to have the concern of some sort of corporate entity or corporate raider come in and take over the enterprise in the event that they need to transition their wealth to the next generation of a family business. So anyway, those are the ideas that I've come up with of why a company may have the desire to go or remain private in today's modern markets in the United States. If you have additional ideas or comments that you think that are reasons why people might want to go or remain private, feel free to share with me your thoughts in the comment section below. And finally, as a special situations investor, I think that it's important for us to look at some of these longer term trends. I personally believe that this is just a snippet in time, and that the pendulum will continue to swing one way, and then eventually it'll swing back in the other direction. And there has been this complaint that we don't have as many public companies as we used to, and yeah, maybe that is a function of regulation and some of the stuff that goes on with that, but I think the future is bright, especially as a special situations investor, because I think that the world will not get to a point where we completely get rid of the public markets and go all private equity. And even if we did, you're a special situations investor, and you're spending your time trying to educate yourself and get better at this stuff, which would actually be the skill that you would need in order to go out into the private equity markets and be successful. Anyway, guys, thanks so much for watching. I appreciate your liking and subscribing if you haven't already done so, and we will catch you next week.